What are the key factors driving the recent surge in silver prices? How do supply constraints contribute to the potential for a physical silver squeeze? What historical context provides for silver price peaks in the past? What practical steps do we recommend for investors looking to capitalize on the silver rally? I'm Joe Elkier. This is Silver Alert Tim Murphy. This is the Gold Spot. Tim, we're seeing silver start to make some pretty good moves. We've been waiting for it for a long time. We're highest prices we've seen since 2011. Can you give us insight? What's fueling this rally? Is it just hype, or is there real fundamentals at play?
Hey Joe, it is very exciting. We just hit $39 an ounce in silver, and this is the real deal. And we've been talking about this for years and years and years. And what you have is a basic economic situation of a dollar that's falling, sustained high inflation, a debt that's just not going away, and it's just going to get worse and worse. But mostly it's a supply and demand thing, which we'll get into. And it's a lot like, gold back about a year and a half ago when gold got over $2,200 an ounce. All these factors kicked in and gold went right to 3,500. We're at the same place now with silver, just breaking out and just reaching $39 an ounce this week.
Tim, you mentioned the supply side of things. We're seeing lots of news or stories. We're hearing about the bullion banks. We've heard some things about the ETF, SLV markets, borrow fees, spiking exponentially at times. Can you give us insight into the shortages or, what is going on the supply side?
Sure, Joe. We, like gold a year and a half ago, we have a supply crisis right now. The supplies aren't there in the inventories around the world. And as an example and reason for this is there's two exchanges. We've got the London Bullion Market Exchange, and we've got the COMEX, the Commodity Exchange in New York, and they both have inventories. And what's happening is that the demand for the silver right now is so strong that they're actually going into these inventories and they're taking delivery of futures contracts. I know it's a little complicated, but this is very, very unusual. The futures market is not meant for this, but countries like China and India, Russia, they're going in and they're taking the supplies off the market at an alarming rate, and it's very, very significant. And the other thing is we've got, according to the Silver Institute, we've got 5 years of production, which has been far less than the actual demand for the product of silver. So in order for that to change, it's going to take many, many years, maybe 5 to 10 years, to reverse this, where the supplies become greater than demand. So we've got a long way to go here in silver.
So you mentioned the shortages. Is that something that can impact price in a pretty drastic way?
Oh, it's going to be unbelievable. This is something that's been building for years and years, decades, really. We've had bullion banks like JP Morgan selling the futures markets and the paper markets and keeping the price down. And as a result, all the big countries around the world have just sucked all the silver out of inventory, and there's nothing left. Now we're like gold again. When we were, 2000, we're ready to really rock and roll.
Let's talk peaks real quick, where all-time highs of silver have came in the past, how it aligns to now, or, how far, how high can this really go?
It's a good question. We've back in 1980, we just almost hit $50 an ounce. And again, in 2011, we almost hit $50 an ounce, just pennies short. So a lot of people are looking at that $50 level as key level. But if you look at the charts, technically we're looking at much, much bigger things. And we just broke out of a cup and handle formation, which might sound sort of silly to you if you don't know technicals, but it's very, very bullish. It's the most important formation almost out there that could exist. And what it's telling us is that the silver is going to go through $50, sort of like a hot knife through butter, and we're going to go to $60 or $70 an ounce pretty quickly. And then from there, we'll have some more trading and so forth, and much higher prices. But that's what we're looking for initially. It's just a much bigger rise than just the $50 an ounce that we saw 15 years ago.
So you mentioned something with the cup and handle pattern, which is very exciting. It's neat to see how kind of history can repeat itself, where we know silver typically lags behind gold 15 to 18 months. It's interesting to see now that silver is breaking out of that cup and handle pattern at about that 15, 18-month mark compared to gold, right?
Yeah, that's correct. This is not brain surgery. This is just, we're based on history, time and time and time again. If you go back 100 years, there's patterns that form, and we're seeing that with silver, and it's just beginning. We're just breaking out. It's just getting started. It's going to be really exciting for the rest of the year.
So what practical steps can people out there, our listeners, take to, take advantage of the upcoming physical move in silver?
Well, the most obvious thing is just to own physical silver. It's and you pay 100%. Don't buy on margin or borrow money, but buy the physical silver, get possession of it. Talk to a professional. Ideally, it would be us, and get an idea of what is going to work for you personally. And premiums are very low. This is a buyer's market because the public right now in the United States is sort of sitting on their hands when it comes to silver and gold. The opportunity is great. All the demand coming from overseas. China is taking advantage of this in a big way. Premiums are low, so this is a great time to buy the physical and just hold on. And Joe, before I forget, one thing that's really important, and I want to emphasize this, is that it's somebody called risk reward. It's a term off of Wall Street, but as an example, I have friends that call me up and say, hey, Bitcoin's going to go to $1 million, and I get all excited. I want to run to the computer and buy it as quickly as possible, but the thing is, it's not really so much where's it going, but what's your risk in the short term. People don't focus on that, and they should. Bitcoin and other vehicles can be very volatile, but the thing about silver is that the downside is practically zero at this point, and based on supply and demand, based on what the dollar's doing, based on all these factors, the downside is practically zero, but the upside is just enormous. So it's really important to take that into account when you're thinking about what to do with your money.
Click on the link below, request our silver report, give us a call. We're happy to answer any questions. It's a very important time to understand how getting out of excess paper dollars and into physical precious metals, gold and silver. It's a very important time for preservation. We're here to help. We'll see you next week on the Gold Spot.
If you enjoyed today's Gold Spot, like or subscribe to both our YouTube and Rumble channels. Also, comment below if you have any questions or if you'd like to hear us talk about a specific topic in a future video.